Now for something completely different. We thought for the first time at the Aspen Security Forum, we should have a real conversation about cryptocurrencies and blockchain, because increasingly they are becoming a national security issue. And judging by the interest we're getting on Twitter and the more than 1,000 people who are with us right now in the Zoom, many Americans feel that as well. We are very lucky to have with us Gary Gensler, the chair of the Securities and Exchange Commission. I will introduce him in a minute, but let me just explain to our foreign policy audience why we believe that there's a national security interest in cryptocurrency and blockchains. For one, China is making rapid advances. They have their own central bank issued currency, the digital yuan. Chinese companies lead, many of them lead in the international payments space. And traditionally, the United States has enforced our sanctions through the correspondent banking system, through SWIFT. Increasingly, there are technologies, many of them not Americans, many of them Chinese, that are replacing that system. And in the US, of course, we've been waiting. It's difficult because the SEC has some equities here, the Treasury Department, the Federal Reserve. So I think many people in the space have been waiting for regulation from the Biden administration and from the key organizations that work on this on the US government. Well, here to tell us more about how the Biden administration is thinking about this, and actually to make a major pronouncements on the regulation of cryptocurrencies, is Gary Gensler. He needs very little introduction, the current chair of the SEC. He was formerly a professor at the MIT Sloan School of Management and also a senior advisor to the MIT Media Lab's Digital Currency Initiative, and actually taught a course on digital currencies. So he's a true expert. And previously, of course, Gary was the chair of the US Commodity Futures Trading Commission, which also has some equities in this space, and Undersecretary for Treasury of the Treasury for Domestic Finance, along with many, many other distinguished jobs, both in the US government and previously in the private sector, including at Goldman Sachs. We're very, very grateful to you, Gary, for being with us today. And to moderate the discussion is one of the foremost journalists who work on cryptocurrencies, this very new space. It's Paul Vigna, a reporter at the Wall Street Journal. He's written 3 books, including one called The Age of Cryptocurrency, another one called The Truth Machine, and also Guts. He's been featured in documentaries, and I couldn't think of a better person. So thank you very much, and I'll let the two of you take it away. Thanks.
Thank you so much for that kind introduction, Anya. I look forward to the discussion with Paul, and thank you, Nick, and others who invited me here to speak at the Aspen Security Forum. Now, as is customary, I should note that these views are my own, and I'm not speaking on behalf of the Commission or the SEC staff. All right, I got that out of the way. So some might wonder, what does the SEC have to do with crypto? And further, why, as Anya just pointed out, did an organization like the Aspen Security Forum ask me to speak at all about crypto's intersection with national security? Let me start at the beginning. Many of you might know it who are listening, but it was Halloween night in 2008, in the middle of the financial crisis, when Satoshi Nakamoto published an 8-page paper on a cypherpunk mailing list. I don't mispronounce it, cypherpunk mailing list that had been around and run by cryptographers since 1992. A little off the grid, a little libertarian, cypherpunk mailing list. Now, Nakamoto, we still don't know who she, he, or they were. If at the end of this talk, Paul wants to tell us, I'm looking forward to knowing who Paul thinks Nakamoto was, wrote, I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. You see, at the core, Nakamoto was talking about some form of private money that didn't have central intermediaries. But Nakamoto had solved 2 riddles that had dogged these cryptographers and other technology experts for a couple of decades, since the dawn of the internet. First was how to move something of value on the internet without a central intermediary. And that's where it can fit into national security, how to move something of value on the internet without a central intermediary. And relatedly, how to prevent what's called double spending of that valuable digital token. So subsequently, Her innovation, or his innovation, spurred the development of crypto assets and what's called the underlying blockchain technology. About a dozen years later, where are we? Well, the crypto asset class has ballooned. As of yesterday, about $1.6 trillion of value. Of course, it goes up, it goes down. Over 75 tokens worth at least $1 billion each, 1,600 worth at least $1 million of market capitalization. And while that 1.6 trillion is relatively small compared to the US capital markets of nearly $100 trillion, it's still significant. And of course, it's larger than the capital markets of many jurisdictions that this security forum would discuss. And before starting at the SEC, I was honored, as Anya said, teaching about the intersection of finance and technology at MIT. This included courses in these various topics. And in that work, I came to believe that though there was a lot of hype masquerading as reality in the crypto field, Nakamoto's innovation is real. And some in the public sector would say, well, no, almost like wishing it away. I really do think there's something real about the distributed ledger technology, moving value on the internet without a central intermediary. Further, it has been and could continue to be a catalyst for change in the fields of finance and money. At its core, Nakamoto was trying to create a private form of money with no central intermediary. We've had a long history since antiquity of private monies competing with public monies. So this is not necessarily new, but it was new how it was done and how it can live in a digital age. Now, let me say, we already live in an age of digital public monies. The dollar, euro, sterling, yen, and yes, yuan, all are digital. And if you had any doubt about that, it's obvious during the pandemic. I mean, who is actually using paper or coinage money in these days? So such public fiat monies fulfill the three functions of monies. Monetary economists have studied this for a long time. Store of value, unit of account, medium of exchange. Why do I raise that? Because my opinion is no single crypto asset, though, broadly fulfills all of the functions of money. Bitcoin has some of it, but not broadly fulfilling all three. Primarily, crypto assets provide a digital, scarce vehicle for speculative investment. Thus, in a sense, one can say they are highly speculative stores of value. Buy Bitcoin, it goes up. Maybe I have something better for my future and my retirement, but it's not really being used as a unit of account. And we also haven't seen that crypto has been used much as a medium of exchange, except for what one large exception. To the extent that it is being used as a medium of exchange, it's usually often to skirt our laws with respect to anti-money laundering, sanctions, tax collection on the dark web, and yes, also it's enabled extortion via ransomware, as we had seen recently in Colonial Pipeline and elsewhere. You see, with the advent of the internet 40 years ago and the movement from physical paper money to digital money, we nations, states around the globe layered various public policy goals over our digital public money system. Sanctions regimes, anti-money laundering, tax compliance. We did that sort of in this digital public money area. And that's what, to some extent, people are using a medium of exchange in crypto. Now, as a policy matter, I'm technology neutral. I would say as a personal matter, I wouldn't have gone to MIT if I weren't interested in how technology can expand access to finance and contribute to economic growth. And I wouldn't have spent so much time around the digital currency initiative at MIT and my colleagues there if I didn't think there was something here that could be a catalyst for real change. But I am anything but public policy neutral. In my current role, as new technologies come along, we need to be sure that we're achieving our core public policy goals. And in finance, what's that about? Protecting investors and consumers, guarding against illicit activity, and ensuring financial stability. And that's where it fits into national security interests. But how does the SEC fit into it? And I'll close with some thoughts on the national security. But the SEC, well, we have a three-part mission for those who aren't familiar: protecting investors, facilitating capital formation, and then in between, maintaining fair, orderly, and efficient markets. Investors, capital formation, and then the markets in between. We focus on financial stability as well as part of that fair, orderly, and efficient markets, but at our core, it's about investor protection. And if you want to invest in a digital, scarce, speculative store of value, that's fine. Good faith actors, by the way, since antiquity have been speculating on the value of gold and silver. So that's been around for thousands of years. Right now, though, in this digital, scarce, speculative asset, Bitcoin and others, we just don't have enough investor protection. And frankly, at this time, it's more like the Wild West than some sort of protection against fraud and manipulation in this space. This asset class is rife with fraud, scams, and abuses in certain applications. There's a great deal of hype and spin about how crypto assets work, and in many cases, investors aren't able to get rigorous, balanced, complete information. It doesn't mean there aren't good faith actors, and there are many of them, but investors really aren't getting the information to judge the risk and understand the risk. And I fear that if we don't address the issues, I worry a lot of people will be hurt. Now, first, about the tokens themselves. Those tokens being offered, many of them are offered and sold as security. There's actually a lot of clarity on this front. So you see, in the 1930s, Congress established the definition of a security, but they included like 20 different items. You'll be familiar with some of them: stock, bonds, notes. But one of the items is called an investment contract. In the following decade, the Supreme Court took up what's the definition of this term: black letter law, investment contract. This case said an investment contract exists, and I'm going to quote for a moment: a person invests his money in a common enterprise and is led to expect profits solely from the efforts of the promoter of a third party. You might have heard of it. It's called the Howey test, related to an estate of William Howey that actually was about orange groves in Florida. And what do orange groves in Florida have to do with cryptocurrency? Well, the Supreme Court has upheld this test a number of times subsequently. And so further, there are other tests. There are many other determinations what comes under the federal securities law. Now, my predecessor, SEC Chairman Jay Clayton, I think, said it well in 2018 in congressional testimony. He said, to the extent that digital assets like, and I think he named Bitcoin, but he said, to the extent that digital assets like initial coin offerings or ICOs or securities, and then he goes, and I believe every ICO I have seen is a security, we have jurisdiction. Federal securities laws apply. I find myself agreeing with my predecessor, Chair Clayton. You see, generally, folks are buying these tokens in anticipation of profits. That's the core thing the Supreme Court said. And there's a small group of entrepreneurs and technologists standing up and nurturing the projects. Geez, anticipation of profits, small group of entrepreneurs standing up something. Our federal securities law says there's a need for some protection. And I believe we have crypto market now where many tokens may be unregistered without requiring the disclosures and the market oversight. This leaves prices open to manipulation. This leaves investors vulnerable. Now, over the years, the SEC has brought dozens of cases, many of them during my predecessor's time. I've only been here 3 months. And yet, having brought dozens of cases, we haven't lost a case. Having done all that, there are thousands of projects out there, thousands of tokens and so forth. I mentioned earlier, over 75 with $1 billion market value or more. There are also initiatives by a number of platforms, and I'm going to mention 3 types of platforms: trading platforms, lending platforms, and then there's a third type of platform called decentralized finance, which sometimes is doing one of the first 2 things. And there are many crypto tokens within these platforms priced off of the value of securities and operating in this space. And so I would have to say that with regard to these 3 types of platforms, the world of crypto finance now has these venues. I believe these platforms not only can implicate securities laws, but some platforms also can implicate commodities laws and the banking laws. Now, just thinking about a platform right now, Many of them have 50, maybe 100 different cryptocurrencies, crypto tokens trading on them. And while each token's legal status depends on its own facts and circumstances, the probability is quite remote that with 50 plus tokens, that none of them are securities. It just sort of belies sort of the arithmetic that I've learned and how I learned to think about probabilities at MIT. You could have 50 or 100 tokens and none of them are securities. Moreover, unlike other trading markets where investors go through a broker or some other intermediary to access, let's say, the New York Stock Exchange or London Stock Exchange or even the Shanghai Stock Exchange, people can trade crypto trading directly. They can do it 24 hours a day, 7 days a week, and from around the globe. And for those thinking about national security, this is very much a 7-day-a-week, 24/7 market with Asia retail participating, with US retail, Latin America, African, European. It's a truly worldwide market.